Morning, everyone. Welcome to this morning's edition of the MPC Markets Morning Call. 24th of April, Friday, 2026. Stocks were lower overnight as investors remembered that there's a war going on, essentially. So, we had Trump ordering the US Navy to shoot and kill any Iranian boat laying mines in the Strait of Hormuz. There was reports around the Iranians laying further naval mines. And that sort of sent, well, as I say, crude's been ticking up all week, and we're around about the $96 mark in the WTI at the moment, 106 a barrel for Brent crude, and the earnings distraction wasn't enough. But look, over the course of the week, realistically, we've been, we're down 0.25% overall. Service now and results, which ended up having them fall about 17% overnight. They reported after the bell yesterday, really damaged this software part. As I said yesterday in the morning call, we're probably another quarter away, at least, maybe 2 quarters away from the SaaS apocalypse sort of being stamped out, really. And it's mainly guidance. They're still beating on earnings, most of these companies, and they're not in a they're certainly not in a bad way, but look, it just is. I can understand from the CEO's point of view, if your stock's down 60 or 70%, you're probably not coming out with bullish guidance at this point, and you're probably trying to tame things down in line with what the share price move is. So overall, look, I think we've had really, where the stellar performers have been so far this earnings season's been around. Certainly been around chip making. Intel overnight was up around about 16 or 17%. They absolutely smashed it out of the park, which is, look, I've got to say, for long-suffering Intel shareholders, that is a fresh record high for that stock for the first time since the year 2000. So 26 years. I'm sure there's an investor out there that's been waiting 26 years to get back to flat, judging by general feedback with some clients we've got here at MPC who refuse to sell until it's in the money. But that is one long wait to get back. I thought the Cisco recouping over the course of 20 odd years was pretty bad, but 26 is that's got to be a pretty good record. Texas Instruments was another one that was really good overnight as well. So it's a lot of the old school fab and tech makers doing pretty well. But look, as you can sort of see, we switched back to those defensive sectors again, a little bit back into the oil. I had Exxon actually on the call yesterday on Ausbiz. It looks really cheap. It's going to have earnings tonight. We're talking like a 9 forward PE and a balance sheet of, Fortress is not even giving it enough credit. How much it basically owns most of the Permian Basin now, and it is consolidated. That turnaround story has happened, and a 9 forward PE with oil prices at these levels for what the market is. I think is completely underestimating will be for a very long time. Interesting. Now we're having analysts talk. We know Reuters and Bloomberg and things like that I listen to in the mornings, and a few overnight reports from the US. Is we had analysts about probably 6 weeks ago going, 60 or 70 is the new normal in oil, and the consensus is now. 80 to 90 is going to be the new norm in oil. And these, whilst these oil stocks have rallied, I don't think if 80 to 90 is the new norm, these guys are going to be printing cash. None of them have got any debt or anything like that. They pay dividends, the whole works. So, and with Trump in power, you would definitely be long geopolitical chaos for the next 2 years and 9 odd months. So so overall, that's the software part, they're getting hit. Microsoft as well. Anything that sells per seat is is definitely having problems. Tesla down on that capex, but I had Tesla as stock as the day on the call yesterday. It was the US edition and or global edition. Look, if you were going to hand any one person in the world money to spend on capex, it's going to be Elon Musk. So I categorically think that move in Tesla is ridiculous. And the big thing was it was a boring report from Tesla and everything was on schedule. That is very un-Elon, which means he's definitely, he's definitely sort of got his focus back in terms of staying out of politics. And the car side of the business, which really is not why most Tesla investors are there, did really well. They growth in every market except China, and obviously with petrol, gasoline, and diesel prices where they are and where they're going to likely stay for the foreseeable future, you're going to see EV demand go pretty well. But what his margins positively blew out to 21%. And it's because of that vertical and horizontal integration that he's got across the board. So they're making their own batteries, they're making their own chips, they're making it. I mean, he was even talking basically that the likes of GE Vernova and Boeing and that do the gas turbines. They are full. Their backlog is full for 5 years. So he's making his own gas turbines as well. Like the guy is very likely the most talented engineer and engineer/businessman entrepreneur in history. He makes Thomas Edison look like he was a lazy bugger. And if you, like I said, if you're going to hand 25 billion capex to anyone, it's that guy basically. Even Intel came out overnight and commented in their earnings call that the move to work with Elon and in getting their CPU, well, Tesla is going to have their CPUs made by Intel. The attraction of doing that deal and the price that he got was basically there's a contra deal there that Elon's going to help them with their engineering and their manufacturing. And personally, that whilst that's not necessarily an official contract, that's possibly the best. You get a new CEO at Intel. That's the best move that they've made in a long time, because they've been historically just lent on the fact that they were the only chip maker. The US government's made an investment. The American people are doing very well out of that investment. The stock's up near on 100%, I would say, in the last 12 months. And we're seeing those old school manufacturers make a real comeback. I mean, I remember my Texas Instruments spelling thing when I was, that's 40 odd years ago. These companies have been around forever. ASX not doing so well on the week, down 2%, down 0.5% yesterday. Look, let's just call it flat for the week. And despite, it's been patchy on earnings, but but as I say, it's been that stuff that's been around the chip manufacture and data center build out that's all done extraordinarily well. As you can see here, crude's killing it, and we're up quite a bit for the week. That 17 doesn't seem. It might be, it might be right, but that doesn't seem particularly right on a 5-day basis. But it certainly bounced out of its low pretty well. I suppose we were around that in the 80s last week, but yeah. So silver and gold have drifted off for the week, but again, probably not much to talk about overall. I expect this part of the this lithium, uranium, and things to be, to continue to head higher overall. So just on these earnings reports, Intel beat, strong guidance. They had revenue at estimates at 12.4 billion. They reported 13.6, basically, well above. CPU demand was the core opportunity. Their PCs did relatively well as well, but this is the last of the memory chips coming through as well. So their costs are going to go up. They did flag that, and computers are still the main part of their business at this point. Yeah, and the turnaround from the new CEO, the asset sales, the layoffs, etc. Have done very well. The foundry is the Terrafab foundry is a massive win. And there's still got execution risks and competition, but look, the stock was up super solid. Solid beat for IBM as well. Revenue 15.9 bill, and adjusted EPS 1.91. Software revenue grew 11%, and guidance was sort of held but not raised, and they reaffirmed. And we had it was a pretty decent result yet again for one of the old, very much the old school sort of manufacturers. They didn't do particularly well because they haven't raised their guidance, so they dropped around about 8% overall. It was still a solid result. And the bar, I guess in this sector at the moment, the bar's really high. Texas Instruments wins the day, up 19% on the day. It was an absolute blowout beat. Estimates, the top end of estimates of 4.5 bill, they came in at 4.8 bill. EPS 168 versus 127. Their best single day gain since the year 2000. So we're going back to some deep numbers here, both for Intel and Texas Instruments. Really strong guidance as well, and free cash flow inflection point obviously very much helps. With these sorts of businesses as well. The data center is the new growth engine. And look, I went back through our market outlook this year, and anything related to that, picks and shovels, that I recommended, and there was a number of sectors recommended in that. Data center build out was one of the high conviction ones. Critical minerals as well. We're talking about the stocks we selected from there, which was around about probably 15, 16 stocks. You're talking 85% of those stocks are in the money at the moment. Overall, which it's been we are at record highs, but there's been intersector moves that have been pretty significant. So it's not no mean feat. Next week we've got a massive day on the Wednesday. Alphabet, Microsoft, Meta on that day. Qualcomm will be very highly watched as well. Apple the next day, and then you've got ConocoPhillips, Chevron, and things towards the end of the week. Pretty quiet early on in the week. We've got Anzac Day holiday here in Australia on Monday. I do believe markets may be open, but it's generally a public holiday. And we're looking at some pretty massive earnings in the scheme of things from a market cap point of view, and then you really only got Nvidia left, which will be probably second or third week. The following week or the week after. Generally, it's usually a couple of weeks after Apple overall. So it'll be interesting to see whether they can hold that up. Look, buy the dip is our new strategy. It's been received very well. We're selling quite a lot of it. You just scan the code, go to the landing page, have a look at the video, have a look at the PDF. And the stats are very compelling for to be buying the dip into a midterm election this year, more so than I ever thought. I'd never really heard these stats before, and went and dug down. You're basically going to get the Monday settlement low of the 6-month period between May and October, and then it's a 3-year strategy overall, and you get to ride out the rest of the Trump administration long, leveraged around about 5 or 6 to 1. So there's no margin calls or anything in it, etc. So if you've got any index ETFs involving the S&P or maybe the FANG, etc., I highly recommend scanning the code, have a look at this thing, because from a capital efficiency point of view, you get the same exposure for a fifth of the cash. And then you can obviously go and do something else with that cash, whether it be, buy some stocks, buy some fixed coupons at, 10 or 12%, put some money in the bank, etc. But well worth having a look at. Look, it's just pure maths. It's just better capital allocation for exactly the same exposure. It's open to retail and wholesale. I highly recommend having a look. Because if you're already holding those index ETFs, this is just a way smarter way to do it. If you want to go and pay an index ETF provider 1% or 0.7% a year and tie up all your cash, up to you. But this is by far and away a better way of doing things. Special edition of Bulls versus Bears this week. Social media is just absolutely full of conspiracy theories around what Trump's doing. Is he playing 4D chess? Blah, 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 blah. So we're doing the tinfoil hat edition. Trump, is he a mad genius or is he just mad, basically? So we're going to go through our some of our favorite ones, the ones that are, that could be true and the ones that are just hilariously ridiculous. So go to Bulls versus Bears. You can find it on Spotify, YouTube, most of your favorite Apple podcasts, most of your favorite podcast platforms. And catch, the team here from MPC, go through we'll do our normal weekly wrap of markets and things as well and what we think is going to happen in the next week. But just have a little bit of fun this week because we're look, I don't know about you guys, but we're all pretty sick of just talking about Trump and Iran at this point in time. So we'll try and have a little bit of fun with it today. And you can, like and subscribe. But look, have a great weekend, people. Enjoy your Anzac Day, lest we forget. We will chat again, I would imagine, on the Monday. Maybe I might do Monday for Anzac Day, a public holiday. But outside of that, we'll probably see you Tuesday. Cheers, guys. Thanks.
Feeling lost with investing? Meet Mosaic. Mosaic is MPC Markets' platform that turns confusing markets into clear, actionable guidance for your portfolio. Discover Mosaic today. Portfolio and trade ideas in one place for clients and subscribers, powered by MPC Markets.